Welcome to the ChangeMakers in CRE, a podcast by Re-Leased.
Hello everyone, and welcome to the ChangeMakers in Commercial Real Estate. My name is Tom Wallace. I'm the founder and CEO of Re-Leased commercial property management software. And today I would like to welcome along Michael Gillon. Michael is joining us from Bayleys, where he and has a lot of experience. Michael has worked at Colliers here in New Zealand, and then went over to London, as many Kiwis do, and spent around about 8 years with JLL before returning back to the shores here, where he works up at Bayleys now. So welcome along, Michael. Great to have you.
Yeah, kia ora, Tom. Yeah, thanks for having me.
Hey, Michael, I just thought it'd be great to get started. Just if you could give us a bit of an intro, a bit of a background into how you got into the industry and your current role with Bayleys.
Yeah, no, sure. So I've been with Bayleys for just over a year now. Started in early 2021 as the head of retail management within the Bayleys Property Services division here. And so for the first, I want to say 6 months of my role here, it was primarily a business development role as we look to grow our retail assets under management. As you mentioned, I was previously at Colliers in Auckland for about 7 years prior to relocating over to the UK for just around 10, with a large number of years there with JLL, where I finished up as national director in their what's called the managed services division, so the property and asset management team there. So all up, circa, about 18, 19 years now in the industry. And, it's been great to be back in New Zealand and trying to grow this retail arm of the business, albeit for, I must admit, for the last, since about August last year, my role's evolved somewhat. So now I've moved into more of a national portfolio manager role, still with the retail business development hat on. In fact, we just picked up a new shopping centre the other week, but I primarily am responsible for the Blackstone or 151 property managed assets, office assets here in Wynyard Quarter, of which Bayleys House is actually one of them. And then also have taken on the responsibility for the Centuria portfolio, which you may recall used to be under the Augusta brand or banner until a year or so ago. So they're, I guess, the Centuria and Blackstone portfolios are two of our largest clients. And, the international, background, which I guess has helped with my previous experience over in the UK, where I was responsible for some similar large clients ranging from institutional investors from the likes of Schroders and RPMI Railpen, what was Standard Life, which is now, I think, some acronym, it might be Aberdeen. Then also, also finished up with a client, which is essentially IKEA. So it was the investment arm of IKEA Inca Centres, who purchased one of my shopping centres in London. So I got to work closely with them. And it was a really interesting journey, actually, with their transition into the ownership of that particular asset, because you wouldn't necessarily think it, but they're very much a sustainability focused organisation. And, some of the initiatives that they were putting in place, or trying to implement, and we'd seen across their more centres that they owned on the continent were market leading, and they're very much an investor who looks at the assets that they own as what they call meeting places, as opposed to shopping centres. They certainly looked at it as a sense of how the asset fitted into the community. So I guess
they did that with their products too. Everything I've bought from IKEA, I've managed to break pretty quickly. I don't know if I'd call their products that sustainable, but maybe they're getting better. Yeah,
so perhaps that might be the rationale as to why they put so much emphasis into their the properties that they own. But no, in fairness, they are they're very much a front runner in terms of the ESG practices that they implement there. So I guess my experience over in the UK, particularly in the ESG and PropTech space, has led me to wear a couple more hats within the Bayleys organisation here, in the sense of leading from that point of view and trying to look at how we can take forward some of the ideas and initiatives that we had in place in the UK and see if they are suitable for the New Zealand market. Obviously, with the differences in scale and population, it's not always as easy to do, but these sorts of ideas and innovations, I think, what property managers should be looking to do. I don't think, my view on the property manager of the future is that they're not going to be, we shouldn't really be focusing too much on what the traditional roles of, collecting the rent and, operating the OPEX budgets. You're going to have to look at, more as we move towards a more digital and automated world. I think you've more likely collection and the like, there just should be the brilliant basics that are done brilliantly. So
yeah, well, hopefully,
I mean,
hopefully
very
the
much
software, get a good piece of software that should do all that, do all that for you, right?
Yeah, you got to do a little plug for the Credio platform. We do utilize it on the Centura platform, and it's certainly worked well, and we're very very happy with it, and more importantly, the client is very happy with it as well. So no, it does help our lives as property managers for that portfolio. That's for sure.
Appreciate the plug. So look, nearly 20 years in the industry. I guess that probably gets. I don't know if I can call you a veteran. I say that's probably getting dangerously close to being in the veteran territory. So I think you would have had that, and also like international experience, right? It's you would have seen a lot of change and a lot of interesting things. You mentioned ESG a number of times. I think that's going to be super relevant in this conversation. UK is, it appears to me like UK is a long way ahead, a lot further ahead than New Zealand, Australia, and the the US on their journey there. Do you have an opinion on when that came about? Like, why are they further ahead when that became something from moved from a background conversation of like this is coming up to actually hey, you're going to really struggle to sell your building or let your building get tenants in unless you take that seriously, which is, it seems like where it's at now. Do you ever did you see that while you were there, that change?
Oh yeah, definitely. It's an interesting one. So having been back in New Zealand for just over a year now, I think my initial views when I got back to New Zealand was that we were so far behind, and there's a lot of work to be done to catch up to what's being done in international markets. That being said, I have seen some really good stuff being carried out by the likes of, without wanting to drop too many names, but the likes of Goodman, and particularly from an industrial perspective, that they're certainly leading the way. You're certainly seeing others, more, I guess, institutional owners, perhaps the likes of Precinct with their GRESB ratings, and Gussie, certainly doing a lot in that space as well. And and even occupiers the likes of Countdowns and their new store formats have certainly got a lot more green, credentials around them. But just to your point around the UK and why they're so far ahead, I think a lot of that has got to do with the mandates around energy performance certificates. I'm not sure if you're familiar with those, but essentially the tenancy or each unit in each building will get a rating based on their energy performance. So it will range from an A, B, C to right down to an F and a G. And essentially you can't do a transaction on a building or a unit that has got a F or a G rating. So that certainly prompted a lot of landlords, particularly some of our clients, to take stock of their portfolio and identify which buildings were at risk of potentially being stranded, which I think is going to become quite the key terminology, is stranded assets out there. From an ESG
I'd like to dig into that. I think that's super interesting. Like if you think about, it seems to me like this is the way these sort of things play out. Is there's a lot of talk about it, and then eventually, like a corporate or a tenant will say, "We've put it in our charter, in our company charter. We simply can't sign a property that doesn't align with what we've said and what we've put out into the market." And from that point on, it's like money's actually talking. So things happen. It seems to start with the institutionals, so like your Precincts and those will be able to react quickest. Blackstone, Goodman, all of those big ones. But it does trickle down to the mass market. And I imagine there'll be a lot of people listening who will be thinking about this in their own portfolio, thinking, when is this coming? Is this going to be, we've seen similar disruption in things like earthquake. And we saw that it can really sort of shake up the market, because suddenly you've got an asset that needs millions of dollars to be spent on it just to get it to the level that it was at the year before, to put a bunch of steel in. What's your prediction in terms of that? Like, what would cause a stranded asset? Do you think what would need to happen to avoid that? Or like, do you think there's just going to be some properties that are going to become really, really hard to let and sell, to lease and sell in the future?
Yeah, no, I think there will be. I think in the UK, just to jump back to there for a second, a large number of their, I guess, landlords, large institutional client or large institutional organisations or pension funds or what have you that have got that internal pressure from an ESG perspective. So they will have their boards and the like questioning their property teams as to what are they doing from a and I probably should have mentioned it for those who aren't aware what the E and the S and the G stand for. So you've got the environmental, the social, and the governance credentials of the companies or the assets as well that they own. And anyway, where was I going with this? So they have a large, I guess, share of the assets within those markets, and it also is the same in Australia. I think where you've got a large REITs or large institutional investors who own a large share of those in offices, industrial buildings, etc. Whereas in New Zealand, I think the property owners type is you got the bright and shiny buildings at the top, the precinct owned, the Kiwi owned buildings, Blackstone owned buildings. But then I think we had a session yesterday with the New Zealand Green Building Council where it was deemed, you got this massive iceberg of properties underneath it, which are predominantly probably owned by families, high net worth individuals, maybe some propcos who don't necessarily have that internal pressure from their shareholders or boards to carry out these sorts of ESG initiatives. And so how do we convince them to get on board with some of these decarbonising their buildings, their portfolios, and why would they jump on board with the whole ESG climate change movement? And it's really going to, I think, come down to a few things, be it a government mandate. It's worked well in Australia, where you've got neighbours mandated over there, where you've got to have a minimum neighbours rating. And I guess I touched on earlier the EPC requirement in the UK. It was funny, when I was in London, you get all my UK colleagues going, "Oh, you're from New Zealand, you got this clean green image. You guys use neighbours?" And I was like, "What's neighbours? I have no idea what you're talking about. I know the TV show."
For anyone's just what neighbours, it's obviously spelt differently. Could you rattle the acronym? I certainly can't remember the acronym off the top of my head. I could probably look it up easy enough. But
I think it's National Australian Benchmark for Energy.
It's a better guess than I've got at the moment. We'll find out and write it up afterwards.
Yeah, I mean, there's so many acronyms, and so to coming back to my point, the around the mandate, I think that's, and I know the New Zealand Green Building Council are doing some really solid work in this space, advocating for some form of mandate to be put in place if we are to reach the target that we've got as a country for that 2050 net zero carbon goal. We're going to have to put in place some sort of requirement or mandate that there will need to be a minimum neighbours rating, because that, in fairness, there is a large number or growing number of buildings in New Zealand that do have a neighbours rating, and so that primarily covers your energy and energy usage. And it's great to see that there are buildings and owners who are taking on board that rating and looking to continuously improve it year on year.
Well, I guess the data's out as well, right? I'm sure some are doing it for the right reasons, but I believe in many cases it's economically it makes the most sense now, right? And I know like governments won't sign leases now without the neighbours rating being at a certain level.
That's right.
But if you're building a new
That's
build,
right.
It would be remiss to not think of that and consider it up front, because you're quite likely building a building that's either going to need a lot of work or is going to be very hard to lease once the initial leases come up.
100%. Yeah, no, 100%. So it's not that common these days for new builds to not have most new builds these days have some form of green star rating by design or as built. And that's great. It's certainly a stepping stone in the right direction. But what I think is hopefully going to be a lot more common is the Green Star and performance rating tool, which takes it the next step further and actually, models, how is the building performing as it should, as per the green design that it was built built to? Is it actually performing in the way that it's supposed to? And how are we checking that? And so, that's measured over a 3-year period and audited, and you get a nice bright shiny badge to say that you're got a Green Star performance rating. And I think, that coming back to the benchmarks, I think that's going to be quite important going forward. I know there are so many these days and it's hard to keep up, but you run the risk of greenwashing if you don't have some form of third-party verification. And it's quite easy at the moment, given the whole wave of ESG, marketing out there, that green promotion. It's very much a concern. I know that there's the International Sustainability Standards Board, ISSB, looking at some sort of global standard, because there's just so many different ratings and accreditations that building owners can sign up to.
Still feels a bit like the Wild West in many ways. So
a little bit.
There's a lot of noise. Don't quite know who to listen to yet. It feels like it hasn't leveled out just yet.
No, that's right. And so it'll be good to have that global standard. And I guess for the moment, for those larger institutions, and particularly those with international exposure, you've got the GRESB rating, which is that Global Real Estate Sustainability Benchmark, which we carry out here for the Blackstone-owned assets, and I know Precinct do it, and I can touch on that's investor-led, so that's I guess pressure from internal stakeholders or shareholders as well to get a GRESB rating, so you can benchmark against your peers and see how you're performing, and that's quite a holistic tool to an extent, where it's not just focused on energy and utility usage like the neighbours one. It also takes into consideration, risk assessments around climate resilience, to looking at tenant satisfaction surveys and how you're treating the occupiers that utilise the space within your building. So it's certainly got a lot of traction globally, and Australia tends to score very highly, and which is great to see. From what I read the other week about Precinct scores, that was also, they did pretty well as well. Yes, a large number of our clients were all signed up to it, and the pressure, I guess, that was put on the fund managers to get good scores trickled down to the property managers who were managing their assets, to ensure that that we were carrying out certain initiatives to try and increase the GRESB score annually. It certainly helped, I think, with some of those investors where I think the likes of Legal & General, we were told that their fund managers were, rather than incentivized on funds in their bonus structure around how their ESG or the assets in their fund were performing from an ESG perspective, which I'm hoping, again, might be a bit more commonplace going forward, and therefore switch for those people in those roles mindsets towards focusing on these ESG initiatives to
totally. It's that
personally
money
benefit,
talking again. It certainly seems to be an effective way of getting action. Oh, that's awesome, Michael. Thank you for the background there. Just to finish off, this has been super enlightening. If you could, if you someone in the property industry, whether you're a property manager, you're a landlord, you're in the industry, you want to learn more, but you're starting from scratch. You're just hearing about this trend. It's something that is real and going to continue. What would be your advice about where to start learning about this and start getting upskilled? Because it does feel like if you don't, you run the risk of being caught up by it down the line.
Yeah, definitely. Yeah, no, there's some really useful training, free training courses that are online on the New Zealand Green Building Council website that are worth having a look at. They cover both, I think, an introduction to neighbours for those that haven't already got neighbours in place within their buildings, as well as there's introduction to Green Star, which gives you an insight into the design rating and also the performance rating tools that are are options should they wish to proceed with those. And there's certainly other organisations out there that have got various different material that you can read. The Toy Twos of this world. I think there'll be the External Reporting Board they're in consultation at the moment, so that's certainly going to be a focus for those financial institutions or financial organisations who, banks, insurers, those with investment schemes where I think is total assets of about $1 billion. I think they've got to report on their Scope 1, Scope 2, and Scope 3 emissions. So there's certainly going to be a lot more focus for those people within those companies or organisations to get upskilled in this area. And you're probably going to see a lot more prop tech investment in ESG. I mean, there's already been a wall of it, but New Zealand, I think we'll see more people looking at carbon calculators and the like, and working out how to reduce their emissions as a result of they're getting that data and feeding it into those sorts of platforms. It's certainly
completely agree.
Going to be a growing space.
Very interesting, fast-moving, growing space, 100%. Hey, Michael, thank you so much for sharing your knowledge and your insight. It's been super enlightening. And I really appreciate you making the time. So it's great to chat. And we're looking forward to talking again soon.
Yeah, no problem, Tom. Anytime.